Okay, a few days ago I recorded a video regarding the large odds-on favourites and how they can be manipulated and a profit can be made. Now I want to show you something different on this race. You can see it's Salisbury, 18th of May, 14:45, 7 furlong stakes. It's 13 minutes for the start of this race and already you can see the second favourite has bottomed out and the first horse is at the top of his range. But if you look at the form, you'll see it actually won its race 22 days ago, last time it's out. So that's why it's the favourite predominantly. The second favourite, you can see its form is nowhere. There's no reason for it to be the second favourite, but it ran 16 days ago. Third horse, again, it's not run for a long time. There's no form there. So the reason I'm showing you this is obviously this first horse, it ran not that long ago, won its race, but it's at the top of its range already with 12 minutes to go. And the second favourite has bottomed out, and there's no reason for the second favourite to be the second favourite. There's no form behind it. So it's a strange one, but I'm looking at this first favourite thinking, you can see on the candle chart it's at the top of its range. Compton Lane has already bottomed out. So I'm looking at this and I'm thinking, the favourite's price is what, 2.9 currently. So there's room for profit and there's room for scalp in there. You can already see the second favourite starting to drift up. But the 12 minutes, just keep your eye on the clock, the 12 minutes to go for the start of this race. So I've put this race on purposely to demonstrate this fact. So the favourite is obviously a favourite. It's got form behind it. It's quite a fit horse. It ran not that long ago. But you can see it reached a low price and the long-term chart is showing it's starting to drift up and it's now reached the top of its range. So I'm thinking, and you may be thinking, well at some stage this has to come down. But you can see the candle chart is continuing to get way past its range. Just checking some of the other horses. There's just no form on the other horses at all. And this can sometimes generate movement because the first horse, Sans Socky Bay, has won its last race, okay, not that long ago. So it's at the top of its range and it started to steam down. So I've placed a trade there, as you can see, and it's been taken. I actually placed a trade on the way back up because there was a massive steam there. And we actually teach this on the advanced module. When you get to that, there's no rush. So I've took advantage of that and I've made a quick profit. Now looking at the third favourite, you can see it's starting to rise. Now monitoring the charts, I can see there's quite a lot of activity on this third favourite. And again, there's no form behind it, so there's no reasoning. There's no logical explanation as to why any of these horses, apart from the first favourite, is generating any liquidity. It doesn't make sense, but it's an opportunity to make a profit. So what I'm going to be doing, I've noticed that there's activity on Black Bubba. So I'm going to be watching that horse. And also watching Compton Lane, the second favourite, which is quite static. You can see on the candle chart it's bottomed out completely, but that may change. There's 10 minutes for the start of this race now, so let's just monitor potentially what could happen. Now my line of thinking and my train of thought here is that the first favourite is all over the place, drifting, it's steaming, even though it's obviously the favourite for a valid reason. It's won its last race. And fairly recently, the other horses have not done nothing. So there's nothing to warrant any movement on the other horses. But traders being traders, they're going to find or try to find value from somewhere. So the drifting and the steaming on the first horse means, and it has to mean, that pressure is going to be coming elsewhere. And that pressure is where the profit can be made. And as a trader, this is what we need to watch for. So let's just see how this pans out. I may be quiet because there's 9 minutes left now, so it's quite a distance for the start of the race, so I'll keep pausing it. Let's just see what happens. So I've got all the candle charts up. Even though they may not show on this 720p, I've got them somewhere, so I'm watching. So you can see Black Bubba is starting to steam slightly. It drifted to 6.4. It steamed to 6. It's gone back up to 6.2. So there's activity and there's movement and potential profit. Movement and liquidity means there's a possibility of making a profit. So let's just see what we can do. So Compton Lane has bottomed out The first favourite is starting to steam down. Black Bubba, the third favourite, has drifted up again. So I'm going to try to explain this in as much real time as I can, because this is how I would analyse the race. Let's see what we can do. I don't think I'll be placing another trade on his first favourite because it's not at the top of its range, it's not at the bottom of its range, and it's not a fantastic price, to be fair. 2.72, but it won its last race 22 days ago, as you can see there. So that's why I'm expecting some activity. Either traders will come in and think, well, it's the obvious favourite, I'm going to pump some back bets on this. Or they're going to think, let's try to manipulate and move some money around. And that will mean potentially the second favourite is going to start moving. At Compton Lane, and that's what I think will happen. I think Compton Lane will potentially start to drift. Then at some stage it's going to steam. And this will all be reliant upon the first favourite and the money that's either going on the back bet side or the lay bet side. You can see Black Bubba there has drifted all the way up. And the favourite has steamed all the way down. And that's what I mean by some liquidity and activity going on that third favourite. That's what's happening. That's why the movement on the favourite has steamed down, because Black Bubba has drifted. Let's just see. There's 6 minutes left for the start of this race. So this is when I start to get interested usually. Let's see if we can make a profit. I think Compton Lane is going to be the horse. So even though I'm watching the first and third favourite, I think this second one, you can see it started to rise up. It started to drift now. As you can see there on the candle chart, it started to drift up. So I think potentially that's where the money's going to be made. Let's just see how high it gets and see what happens on the first favourite. Again, you can see it won its last race. Second favourite, there's no reason for it to be there. Third favourite, last time it raced was half a year ago. So the favourite is the fittest. It won its last race. It's the obvious favourite. But the odds, it's not an odds on. 2.5. It's not an odds on, but you can see it's steamed all the way down there. Black Bubba has drifted. Now you can see, as he expected, Compton Lane has started to drift. So this is what I'm watching now. It's the top of its range. It's been static for quite a long time. So I'm now watching the second and third favourite, watching to see if any pressure is going to push and drift that favourite price. And it is doing, you can see it's starting to. The favourite is starting to drift again. We're into that last final 5 minutes now. Okay, so I placed a trade on the second favourite. 4.2 and 4.1 respectively. Because the price on the favourite started to drift, as you can see. And as you can see again, the second favourite, both of them trades have been taken, and we've made a profit now at £6.51. So the price on the favourite started to drift up, and the second favourite price was already at the top of its range, so that started to steam down. Well, it steamed down at least 2 ticks, which is where I made a profit. So we're now at £6.35. And that, as you can see, was made out of nothing. And it's just monitoring the reasons why certain particular horses are the favourites, and why the second favourites, even though there's no form behind them, why are they even in contention? And it's because traders are looking for value. You can see there Compton Lane has now drifted all the way up. Because we're in that last final 5 minutes, the previous race is finished, traders have jumped onto this race, looking to see where value can be had. So it drifted all the way up and it's starting to steam all the way down again. If you look in the candle chart on the right hand side, you'll see. So that is where the value was, waiting. You need patience, and I was very patient there. It was almost a race where I wouldn't trade it, but because the first horse was such an obvious favourite, but the odds didn't reflect that. I think 2.5 it reached, and for such an obvious favourite I'd have expected that to be odds on, but it wasn't. So it means it's potential value. So I've placed a secondary trade there, as you can see, as the second favourite reached a high point. So I'm expecting, because this first horse again is such an obvious favourite, I'm expecting that price to steam at some stage. So this second trade I've placed should get matched. I'm just going to hover around 4.7 just in case it goes in the opposite direction. So then I'll take the profit at 4.51. It's a waiting game, this. It's to see what happens. It's at 4.7, 4.8. I just need that secondary trade to get matched, and that's probably going to be it for this race. So the favourite's starting to steam down slightly, which has pushed the second price up, and as you can see, the price has now been matched. There's 1 minute 51 before the start of this race. So it's just a case of analysing and watching and understanding why traders are trying to find the value and where potentially they're going to find that value. And that first horse being an obvious favourite, I just knew, because it wasn't an odds-on horse, there was going to be movement elsewhere. And that's where you're looking to take advantage and manipulate. Because other traders are doing the job for you. They're pushing the price up and down, liquidity going in all over the place. And it's just trying to get a grasp of why that's happening. And then watching the candle charts and seeing where the pressure is coming from. So by watching them first 3 horses, I could see the pressure moving up and down. And I could see potentially what was going to happen. So that first favourite, now if it wins, I can win £4.24. Second horse, I can win £42.40. Currently, I'm on £10.49. So this is ideal to take in play. Ideal. So I'll pause the video and I'll take this in play to see if it can increase. But again, you can see first favourite won 22 days ago. So he's got a good chance of winning this race. So I'll take it in play, I'll pause the video and let's see if it can increase. So if we scroll down, you'll see the first favourite I can win 420 if it wins, second favourite 41.98. So the first 2 favourites I've traded, but I've not cashed out yet. So I could potentially take this in play, and that's what I'll do to try and increase. But all we're doing is watching the candle charts and we're reacting to the pressure, where the pressure's arriving at, and then placing our trades. Okay, so the race has gone in play. It started at £9, let's say £10 it started at pre-race profits. So I'm going to look to increase that. So we've got number 2 and number 3 as the traded horses. As long as them 2 do fairly well in this race, then we can increase on the pre-race profits, and that's what I'm going to look to do. So I'll maybe look to make £15, because that second favourite can make £40-ish if it wins. So I should be able to get £15 on this race, providing Compton Lane does fairly well. Let's just see. Okay, it's doing fairly well. And I've clicked to cash out at £15. It wasn't taken first time, so I've had to click it again. And it's now cashed out. So even though it's cashed out and I've been matched on Compton Lane, it's falling back. And the first horse looks like it is going to win. So, based on form, it's come into play. But even though it was an obvious favourite, and chances are it was going to win, because it was a fitter horse, it still doesn't mean that there's nowhere else that can be traded. Because movement was coming in from elsewhere. Basically, watch the movement, and I've actually increased profits by 50%. It went in play at £10, we've made about £15, and the increase is 50%. So this shows you, even though it's an obvious favourite, money can still be made on secondary horses. Okay, thank you. Okay, we had an email coming today from Ronald, a customer, asking a very good question actually. He says, "Hi Stuart, how can I check where certain resistance points are in the past?" So if you just turn your Bet Angel software on and you go to the first race, if there's not been a great deal of activity or you've just switched it on, the candle charts will not show a great deal of historical movement. I.e. if you look on Ronald's screenshot, you'll see it started at 4.1, you may be able to see that, and that's all he can see. So he can zoom in all the way, but that's all he's going to see. And what he's asking for is how can he filter information based on that? He's just switched it on. There's nothing happening. Because it is a good question. I said, "Hi Ronald, it's a good question actually, and one I may make a video on, which I'm doing. I usually only take the resistance points from around the 15 minutes max, because it's short-term liquidity we're actually looking for. Now I actually put a video in the members area today, and at this point when I've just taken the screenshot, there was about 5 minutes and 8 seconds left before I started the race. So if I just switched onto that race on the software, and the candle chart's not showing me a great deal of historical movement and price movement and liquidity entering the markets, I can see this from the ladder, because what I can see here is the price is currently 1.53, so it's at the bottom end of its range on short-term liquidity. The top end of its range is 1.6. You can see that in orange. You can see the liquidity and the price that it's been placed. Now this liquidity could have been placed 2 hours ago. It doesn't matter, it's been placed, and these are the price points it's been placed at. But short-term liquidity, you'll see it's in pink or red, and this is the very short-term liquidity, i.e. liquidity that's entered the market in the last 10 minutes, 20 minutes, whatever. So what I can gain and gather from this screenshot, i.e. the ladder, at that particular moment in time, is that the price is bottomed out. It's at the lowest range of its short-term liquidity. So if it reaches 1.6, it's going to break through what I would consider the higher range of liquidity, and chances are it's going to drift. Now, if the price was to reach 1.6, this is the point I would be looking at watching the liquidity on the lay side to reduce, and then I'd prepare myself to actually place the back bet, waiting for it to reduce, and I will think it's going to reduce because it's the top end of its range. The bulk of the money has actually been placed between these 2 points. So if he reaches that high point, it's either going to break through that, i.e. the lay bettors are going to continue to place their bets, and it's going to break through the short-term liquidity, or chances are it's going to reverse and start coming down in line with where the bulk of the money's been placed. That's just the way trading is. That's the way the liquidity market works, and it always works like that. So even though the candle chart short-term is not giving a great deal away, we can still see that probably in the last 15 minutes the highest price it's reached is 1.6, lowest price is about 1.53, and you can gain a lot of information from just the ladder itself rather than the candle chart. Ideally, if the candle chart is giving you this information, then fantastic, but that doesn't always happen. So you need to gain and gather and filter information from the ladder itself, and you can see this, 1.57, 20 grand, 1.56, 20 grand, 1.55, 17,000, 1.54, 18,000 has been placed. So that's where the bulk of the money has been attracted on these price points, and we can see that. The candle chart may not show you that, but we can see that from the ladder, and this is factual evidence of where the prices and the liquidity has been attracting towards those prices. So it's currently at 1.53, it's at the low end of its range, so it's possibly, if it breaks through that, it's going to steam down, potentially. If it reaches 1.6 and it breaks through the higher end of its range, then potentially it's going to drift. Now these potential movements are what we're looking for. So if it reaches 1.6, we're then looking for it to reduce and turn around and be attracted to where the bulk of the initial liquidity has been placed. So if you turn the software on and the candle chart is not showing a great deal of activity and you can't filter any information from that, then have a look at the ladder, have a look where the short-term liquidity has been, have a look at the higher end of the short-term liquidity and where it's bottomed out and where the low range is. And this gives you a fantastic amount of information, and you can use this to your advantage. But if the candle chart is showing this, then it will replicate what the ladder is showing. But if it's not there on the candle chart, then obviously you cannot use that until a few minutes have passed. But the ladder will show you these details, and you can filter and use this information to your advantage. Okay, I hope that helps, and thank you. Okay, on this video you can see it's the 5th of January 1530, and I've actually done some scalps, you can see that. So I'm actually in a profit at 2.95, but I'm anticipating what's going to happen here on this favourite. You can see it started about 3.1, it dipped to 2.98 by the looks of it, and then it's actually drifted all the way up. Now what usually happens, you imagine that you placed a lay trade around 3, and a load of other people did the same, and it starts to drift up, and you're thinking, when are you going to get out? Should I get out now? 3.3, 3.5? There's going to be a period of time where you think to yourself, I need to get out here, and everybody else will be thinking the same because they can see this steam and they can see the drift. Now the favourite is actually drifting. Now you can see here, it's a fairly close race. The first 5 horses are very similar, but it's actually drifted all the way up, and you can see the short-term liquidity. There's money being dumped already there. There's a lot of money at 3.7, a lot of money at 3.65, you can see that. So there's going to be a point where all these lay bettors start to dump their money, and the way they do that is they lay off by placing a back bet on the back bet side, and that means they're dumping all the cash. They're actually taking the profit and actually running at this stage. So if I zoom in, you can see the price is at the highest point it's been. So I'm expecting this to happen pretty quickly. Let's just see when it happens. And what I'll do then is actually place a back trade and capitalise on the dumping of the cash. You'll see this happening. Just watch. So now the price has reached the highest point it's been. Absolutely. So the people on the lay bet side are going to be thinking, I've had a good run here, and you'd be thinking yourself the same if you was in this position. There's going to be a point where the price is going to turn and it's going to steam all the way down. Now if you're a lay better and you're in this profitable position, you don't want to wait too long. So you can see all the short-term liquidity is where the money is going to start to get dumped. So you can see I've placed a back trade at 4 and a lay trade at 3.95 because I don't really expect it to go much higher than this. And I think a lot of the lay bettors are going to be thinking the same. So as soon as the lay bet side start dumping their cash and taking their profit, the price will drop. And there's going to be a point when this happens. And you can see the short-term liquidity at 5.4 thousand. That's the short-term liquidity. You can see there all the liquidity entering the market. There's going to be a point where this price turns around. You can see it started to, and it took my lay trade. So I've actually made now an additional profit. But you can see there the point at which it turned. The price turned around because all the lay bettors who had fantastic profits at this stage are thinking, when is the price going to turn? When is the price going to start steaming? And as you can see, it started to steam. This is exactly what I predicted. You can see that there's a lot of money now being entered into the market, and that's the lay bet side thinking, when do I get out? When do I get out? That's the point it happens. It's at the top of its short-term liquidity. It's about 5 minutes to go before it started the race, but you can see it turned around. Second favourite's at the bottom of its price range. The third favourite's at the top of its price range. You can see there. You can see the second favourite's bottomed out. It's at the lowest price it's been. And that's the reason why the first favourite and possibly the third favourite's at the highest price they've been. But you notice these things and you can capitalise on them, especially on the favourites. If it starts to drift upwards, all the back bettors will jump on, and there'll be a point where it turns around, and it's usually at the highest point of its liquidity. So if you monitor that and watch it, you can capitalise on it and wait for it to turn. Then all the lay bettors are going to start dumping their liability, taking the profit out of the market, and as soon as they take the profit out of the market, the price has to tumble down. And you can see that happen there. It reached 4 and then it turned around, and you can see there on the candle chart it's just spiked up again. You can see that, so I expect it to drop again because it spiked up, and that could be the lay bettors actually manipulating the market. So it's going to turn around again. So what's the liquidity on the lay side and what's the candle chart? And you'll see this happening. You can see there'll be a point where it turns around and the lay bettors are thinking, okay, I've made the profit, when is it going to turn? I don't want to leave it too late, so I'm going to dump my position and take the profit out of the market. And you'll see that will happen. Just wait and see. And as soon as that happens, you can see there a chunk of cash came in at 4.3. So that's the lay bettors dumping their cash and taking the profit out of the market. So immediately I placed the back trade and the lay trade, and as you can see, an additional profit's been made. It's predictable. Once you watch the markets and you monitor the markets, it is predictable. Because if you're in their position and you've placed a lay trade at say 3.3 and it's drifted all the way up, you're thinking, how far is this going to go before I need to get out? If you don't get out soon enough, then the price will steam back down and you lose a nice chunk of profit. But you see it happening all the time, and you can take advantage of this. So currently there's 2 minutes and 45 before it started the race. The second favourite has bottomed out big time, and this first favourite is still similar to the top of its short-term liquidity, but you can see I'm guaranteed a profit already now. I made £6.6. If that first horse, Tranquil Days, wins the race, I make £13. Or I can cash out now for £5.98. So if you was in this position, you would think to yourself, well, what do you need to do now? Now you can see on betfair.com, you can see I cannot lose in this situation. If that first horse wins number 1, I'll win £15.45. If the other horses win, I'll still win £2.93. So I'm in a guaranteed no lose position here. And it's all because I monitored what was going on. I monitored the short-term liquidity on the lay side and how high it actually got, and then predicted it was going to turn, and it did turn. So you can see on the live Betfair feed, the race is nowhere near started yet. Even on BetAngel it's saying it's close to starting, so I can cash out for £6.21. So what you can decide, you can see on that third favourite I did some scalping on there and I guaranteed a profit at £2.23. So once you add that to the first favourite profit, as you can see, it's about 15 quid that can be made. No lose situation here. So the way I look at this, I think, well, I can cash out for £6.22, or if the favourite wins, I make an extra £13, and is it worth taking in play at this stage? That's for you to decide, but it's a guaranteed no lose situation, so it would be entirely up to yourself what you do here. Now what I'm going to do, I'm going to cash out before this race starts, and the reason I'm going to cash out is that if you look at this first horse, Tranquil Days, you'll see it's done nothing, it came nowhere. It's not ran for over 40 days. The other horses, there's just no predictability in what's going to happen. They're like first race runners. It's like they've never run before. They've no stats behind them. So I'm going to cash out this position, but I'll see what happens in the race. So I've cashed out. So I've made £4.9 on the first and the £2.22 on the third favourite. So you can see that I'm guaranteed a profit now, £6.31, no matter what happens. You can see it shows that on Betfair as well. All the trades have been matched and I am out of the race. But that first horse has done nothing to predict. There's no real reason why that horse should win this race, but we'll see. So the race has started. You can see I've got the live stream up. Now let's see what I would have made if this race, if I left it in play. You can see the price is dropping slightly, so maybe I would have been on a profit of about £7 here. But as it is, I'm guaranteed £6.32, so it doesn't really matter. So I reckon I would have made about £7.50 because the price did drop. You can see the horse, Tranquil Days, is in position 2, it's in second. It's a 6 furlong handicap chases. So you can see there number 5 is actually winning this race. Tranquil Days is dropping back, so I was right to cash out. I maybe would have made 10-15% more in play. But the first horse, there was just no reason why that was a favourite. There was just no reason. So that's why I cashed out. If that was a fancied horse, then maybe I would have left the trade in play. But what I've tried to show you here is the short-term liquidity. And when the favourite starts to drift, there's going to be a point in time when the price turns, and you can see that's where it happened, and that's where I capitalised and made the profits. Okay, thank you. As you're trading, there's obviously certain aspects of the races and the runners which will dictate how well the liquidity is going to land on particular horses. Now, none of us are mind readers, and none of us can dictate and specify with any kind of distinct accuracy which horses are going to attract the liquidity. Obviously, on the course I mentioned that the favourites do attract a lot of liquidity, but there's reasons behind this. So this short video I'm going to call Homework, Filters and Due Diligence. Doing your homework for the best possible outcome when trading. Know the reasons why the money is being placed on certain horses. Now, there's certain factors and certain homework and filters which I apply to races, and I probably trade about 8 races a day. Now I filter these races down. I probably check early morning, maybe around 10 o'clock, 11 o'clock, 12 o'clock. I check which races are running, and I have a filter system, and I'm going to show you how I do this. Now, firstly, what I check is tipsters and their tips. Newspapers, online tipsters, tipster roundup websites, napchecker.com, which I've mentioned on another video, and I also listen to the live commentary. Now, as I've mentioned elsewhere, gamblers in general are going to take their tips from somewhere. They're not just going to randomly pick a horse to start pumping money onto and thinking, oh, this is going to win, this one's going to lose. I would say the large majority of gamblers will read newspapers, online newspapers, they'll read certain websites, and this napchecker.com is definitely a website which I advise you look at and check, because it correlates and it combines all the newspapers and all their tipsters and the horses which they decide have got the best chance. So I advise you use that and listen to the live commentary, listen to the radio, just get a feel for what's happening and where the expected money is going to land on which horses in which races. Now, the next thing I check is odds checker tips, oddschecker.com. Many people use odds checker and follow their advice, and odds checker have their own tipsters. As I said, gamblers will gamble based on such advice. So as well as the tipsters and their tips, I would also check oddschecker.com and check the tips which they're advising for the day, because more often than not, and the amount of people that visit and take advice from oddschecker is phenomenal. It's a massive website, and people use oddschecker to check the tips on a variety of different subjects, not just horse racing. So they're already in the habit of checking that website, and I do it myself. You know, if there's a boxing match coming up at the weekend or any kind of event which can be traded upon, I will go straight to oddschecker and I'll check all the bookmakers and their tips, because it combines all the bookmakers and it puts all the odds from all the bookmakers on every single event, every race and every horse. Now the next thing I check is Betfair Timeform tips. Now obviously Betfair have an in-house team which will dictate the odds of the events which they're offering to their customers. Now obviously many people use Betfair, but more people use Betfair Timeform for their tips, even if they're not using Betfair to place their bets. Check Betfair Timeform just to see what they're recommending, because there's some serious action and serious research goes into these tips. So it's best to have a wide range of information at your fingertips. So I would advise using Betfair Timeform as well. Now something else you need to check. Popular trainers. Popular trainers. The top trainers obviously attract a lot of attention, as their horses are usually a focus of attention. They win more often, as they have better financing, they have better training facilities than the smaller trainers, and thus attract the bets and the liquidity on their riders. You think of like Frankie Dettori, for example. He obviously was with the best trainers. The horses which he rode, you know, he had a large percentage of winners, and that's because the trainers, they have better breeding facilities, financing and training. You'll find that the gamblers and traders who are successful will have a great idea and a great understanding of who these trainers are and why they are successful, and which horses they have in their stables as well. You'll need to research this, but write this down. Popular trainers, find out who the top trainers are. More often than not, you'll find that their horses will attract quite a bit of liquidity. Now the next thing I would check early morning is the previous form of the horses. So I actually get the market watch list up on the BetAngel software, and this is how I filter. But before I do that, obviously I'm checking certain aspects and certain points which I'm explaining. Now previous form is obviously a large indicator. If a horse has won its last race, then it's got a great chance of attracting liquidity on its next race, because most gamblers are thinking, well, if he's won his last race, he's got a great chance of winning the next race, and on that basis they will place their bets, which makes sense. So there's a variety of websites where you can check the previous form of horses, but it shows this on Betfair and it also shows this on BetAngel. Gamblers obviously use form as their starting point, because what you're taking into consideration is its previous results. Also check the fitness the last time it ran. Obviously if a horse ran 7 days ago compared to the second favourite at maybe 60 days ago, then it's going to be fresher. and it's going to be more informed and it's going to be fitter. So dig into the stats and find out as much information as possible of where you think the money is going to be attracted on which horse. There's always going to be indicators because gamblers have to take their advice from somewhere. And whether it's the right advice or the wrong advice, it doesn't matter as traders because we're looking at where the liquidity is being placed on which horses and which races. So if a trainer, for example, who you follow as a trader, is placing his horses in a certain event or a certain race card, then maybe you may want to follow that because then you know that the liquidity is going to be attracted on his horses, and that's important. Now next, I look for the reasons as to why horses are chosen as first, second and third favourites. Now this goes back to the first few points: the trainers, the previous form, the fitness of the horse, the course and distance, how did it last run at, did it win, did it not? It's all information which will dictate and decide where the money goes and where the money's being placed. Nobody gambles for the sake of it. Obviously you have the Grand National and people are gambling for fun, just to, the work colleague will have some kind of lucky dip. But that's not the norm. Most people don't gamble for the sake of it. They're not going to throw money away, especially in this day and age. They're looking for reasons. And nobody gambles for the sake of it unless they are stupid. So put the Grand National aside. Unless you're silly, you're not going to throw money away. So there's many reasons why people will gamble on certain horses. What our job is to find out why. Now the weight of the money on which horse and what the reason is, again this comes down to research. And this probably relates to the previous points where tipsters are advising their readers to place their money will dictate the weight of the money on which horse. So this all combined will decide and give you a great indicator when you're doing your research and doing your filter. Study the long-term charts. And when I look at the charts, I look at where the price started. I look at the reasons why potentially it drifted or it steamed. And it gives you a feel for which horses you think the money is going to be attracted to in the future. Maybe the last 10 minutes, the last 5 minutes. So study the long-term charts and see where you expect the prices to go in its final 5 minutes, which I do the bulk of my scalping and trading in the final 5 minutes, when all the liquidity enters the market and the previous race is finished. Watch liquidity closely. Now when I'm trading, my eyes are predominantly on the candle charts, the long range charts and the short term on BetAngel. I watch where the money's being placed. I watch for the drifts. And I watch for the steams, and I watch for any kind of indicator of where the money's going to go and the price is going to drift and be affected by liquidity. It's important to watch closely. And the more you do this, the better you'll be able to anticipate where the price is going to move. And it takes time. It takes experience. But you can only find this experience by doing it and actually finding out what's happening pre-race and the reasons why certain conditions and certain prices and certain happenings happen. Now watch out for manipulation. Monitor the candle chart activity and play the horses off against each other. But you need to watch out for manipulation because there's so much money in trading these days that bookmakers, if they have a risky position, they will use Betfair to offset any risky position. So all of a sudden you'll find, 5, 10, even 20 grand entering the market, even on the lay side or the back bet side. And this can create a spike in the pricing. So you need to watch out for this. And it's not just bookmakers as well. There's people, there's traders who have betting bots which create a algorithm and they look for certain criteria in the trading patterns. And once certain criteria has been activated, then these betting bots will trigger a trade. And this can be 3,000, 5,000. Again, it doesn't really matter, but you need to watch out for this because there's a lot of manipulation going on and you can take advantage of this. And this is the theme of Module 1. Filter the race based on comfort. For example, there's an email that came in a few days ago and a customer says, well, what happens when two favourites are closely matched? I.e. the price is very similar. And it cannot anticipate any drifting or steaming. So what I actually said to him was, if you're finding a difficulty on certain races, i.e. if the favourite is not an out-and-out favourite and the second favourite is maybe a few points behind, if you're finding difficulty in them situations, then avoid them races. There's so many races in a day that you can filter and dictate and specify where you want to trade. And I do this myself, and I expect you to do that, and I advise you to do that. So you can filter the races based on comfort. Once you gain experience, if you then want to trade just 5 races a day, then you can do that. Do your homework. Now this is important. If you don't do your homework and filter the reasons why money is entering the market on certain horses, then other traders will be doing this, and they'll use their homework against you. So you need to take this seriously. So by doing your homework, placing yourself in a more advantageous position in trading, it just goes without saying. Plan your trading. Once you get into the habit of doing your homework, you could start at 10 AM in the morning and just have a quick flick through the race cards of today, the horses, the trainers, previous positions, the fitness of certain horses, the odds that you're comfortable with trading. You can then plan your full day. So initially, I know a lot of members are actually going right through the race cards to doing 10, 15, 20 races a day. But as you gain more experience, you can increase your profits on races. So you'll find yourself not going right through the race cards. Maybe you'll choose 5 to 10 races a day. But you can use all this information and all this homework to actually plan this. And it gives you a lot more confidence moving forward once you've got a plan of action and you've done your homework. And you'll be surprised just how the homework anticipates certain results on races and certain liquidity attraction on certain horses. You'll be surprised, but it makes you more confident as well when you're trading, so I advise you do that. Plan to succeed. As the saying goes, failing to plan is planning to fail, and it's so true. Take this seriously and your profits will also be serious, which is true. Because once you've done your homework, you can plan your day out with confidence. You'll have a greater understanding of what's going to happen on the day. You'll know the horses in more detail. You'll know potentially where the liquidity is going to be placed. And you can then filter down the races. It does give you a lot more confidence rather than just going from race to race and thinking I have to trade every race. Once you've got a great understanding, and knowledge is power in trading, you'll get to know certain horses and you'll get to know previous positions, the fitness, the trainers, and all this combined has to give you a greater platform for moving forward. So I advise you do this and you do your homework. And the more you do this, the more you start, let's say you start at 10 o'clock, you start checking the previous form, you look at the races, you look at the odds. The more you do this day after day, the quicker it gets because your knowledge base is increasing, which means you're becoming more professional. Again, as I said before, it's surprising that once you've done your homework, how better you feel about trading ahead for the day. And the profits usually go to plan based on that because you know where the liquidity is going to be attracted. And as I said earlier, there's no magic wand. Nobody really knows with any accuracy where the liquidity is going to be placed on horses. All we can go by is the information at hand. So I advise you do your homework and check as much as you can check. The tipsters, the trainers, what you're comfortable with, filter the races, filter the horses, and plan the day ahead and you'll have a lot more confidence moving forward and it really will help with your trading. Okay, thank you.